There we go. There we go. All right. So as we, hang on, I know there's noise in the background. Hold on, 2 seconds. Okay, I apologize. I'm back here. So, good morning. So, as we get started, just so you know, Bill's teaching, filling in for Rob at the trade school in Atlanta today. And so you have Sydney and I, because my babysitter, yes, is not here yet. So you get Sydney and I. That's the rough start. So glad to have you guys here. Yeah, it is. It's Unplugged with Markay and Sydney. All right, so as we begin, just remember neither Sydney or I have a license. We're not broker-dealers. Hey, come say hi. Which means we don't give individualized trading advice or recommendations. Trading does have risks, so paper trade and use caution before moving into any real money positions, of course. And neither of us have any trading restrictions. There you go. Yeah, her license isn't here yet. It's on its way. All right. So there we go. So yes, neither of us will give you trading advice. How's that? Sydney will give you all sorts of other advice, however, like do this, do that. All right. Scott says, yeah. Oh, texting. Yes. Not. You know what? There. It seems like. Well, here. Let me bring in the charts. We'll look at some things. Bill has yes, and Sydney's going to be taking over Bill's CEO role as well. Exactly. I love it. All right. Jeff. Yeah, Sydney can't do better or worse, maybe. You never know. Then you've been doing? Yes. All right, hang on a second. Here, this is what I would like to do. Let me got all sorts of things to start with. I want to bring in this template right here. There we go. All right, so we're looking at my 5-minute and my daily chart, of course, and Mike wants Sydney's new DVD set. Gladly. I love it. It's the first time she actually left the office and closed the office doors. That means she must be mad at me. She's out. She's going through all sorts of renditions of the 5 little monkeys jumping on the bed. Now it's 5 little brothers jumping on the bed and 5 little frogs jumping on the bed. So that's what we've been doing this morning. And Diane, oh, you're in Fort Myers. Oh, sheesh. That is so awesome. I'm so jealous. So having fun in Fort Myers. That is so cool. So, so hello, everyone. Let me do this as we get started here. Would you like to look at the S&P? Yes, Julie, it is a very popular tune. All right, so you check this out. Market started to move this morning and had that upward momentum, and they've really slowed down. And I've been watching this, kind of waiting to see if we get some breakouts to send some chart watch alerts or something. But nothing yet, as the S&P has been moving into a pinch. And yeah, Scott's going to fade into lunch. Yes, absolutely. We definitely had that today. And just, you know, and I like this momentum that we had, but you don't want to lose sight of the fact that the S&P, when you look at the daily chart, you realize where we're at. That's it. Mountain Sand is right up to the 10 moving average on the daily. So as good as this rally looked this morning, and it still could break out, we've got to realize that we're already moving into a Bollinger Band pinch as the S&P approaches the 10 exponential moving average. And so it's got to be able to push above this. It's got to be able to push above the 10 in order for things to continue looking really bullish, right? Yeah, Scott said got stuffed out of all 3 bearish plays this morning. Yeah, and if you were holding bearish positions overnight from the moves that we've had here recently, I mean, yesterday was a great sell-off day. Today very likely would have triggered stops on many of those. Now, the thing is, when you look at this, we had such a great setup from Friday to Monday, basically a Friday, the S&P. All right, let me show you what I talked about in the Market Insight. Just focusing on the daily chart of the S&P. Okay, so Friday, this was our close. If you look at the chart here with the yellow background. So on Friday, the S&P rallied right up to the 10 exponential moving average and closed at the 10. So it's a great, it's at a turning point, right? It's sitting at resistance. We don't know for sure if the resistance will hold into this week, but we know it's at that resistance level, which is a great place to buy puts if the markets roll lower. It's also a great place to buy calls if the markets break out. And so you know what happened? Yesterday we had this beautiful setup, classic continuation of a downtrending pattern. Now, today, it's right back up to the 10 exponential moving average. And so when you see something like this, it definitely tells us that the markets are choppy, right? Usually, if you've got a good moving market, you're going to have more than just one down day in a row. But would that be, yeah, you'd have at least two or more down days in a row, not just one down day, and then the next day is up, and then the next day is down. So yeah, actually, good question. Mike's saying, could this be considered a pinch? Here with the, you'll notice the candle bodies where they're sitting below the 10 exponential. So in fact, a lot of times that comes into play to kind of help set up some of our different trading parameters. Let me show you. Just as far as when you're trying to find where things look more, more bullish and bearish, you can use these the averages if a stock or an index gets stuck in between there, and it's close to that on the S&P. Let me show you over here because I've already got a 5 moving average on extreme charts. So a better moving average pinch, honestly, would be if the 5 moving average was underneath the candle bodies and the 10 was above it, so that each day you have complete consolidation inside those averages. But it's close to that kind of idea there, that it's just sort of stuck in this area. It's not really breaking and closing below the 5, and it's not moving above the 10 either. So it's sort of this neutral, uncertain area, right? And then for those of you that do listen to my Market Insights, there is another thing going on this week that over the weekend when I recorded the Insight, I talked about this being a week for short-term trading. Being real careful. Do you remember why? Scott says we're supposed to listen. There is all sorts of stuff going on this week. There is there's a Fed meeting, so they're going to release a statement tomorrow. We have tons of earnings. So that's it. Between the Fed and earnings, we have a lot of volatility and a lot of things that could move the markets really one way or another. There you go. Tippy says my man Art Cash and thinks it may go up. I love him. Yeah, and you know what? I think it may. It may also go down. I think a lot of what will happen this week will depend on some of the earnings coming in and especially some of the Fed action. So to see that the markets had a great setup yesterday and then completely failed the bearish setup today isn't all that surprising to me. It kind of tells us people right now are anticipating the Fed and thinking that it might be something good. I mean, that's really almost what we're seeing here. And a lot of people out there expect that the Fed won't do much, so we'll see. I read an interesting article over the weekend that they said that they think from the Fed's action, the last time they raised, and with the big market sell-off that we got after that, they say that was basically the equivalent of 4 rate hikes, and so they don't expect the Fed to raise again for quite a while. We'll see if that's true. You know, that's just one person's opinion, but a lot of the opinions out there that I have been reading seem to be that people don't feel that the Fed is going to raise, and so maybe that's what we're getting today is a little bit of buying pressure into either investors expecting good earnings out of companies or investors expecting the Fed to do something or not do something, right? Something they want them to do, which is probably nothing. But this is the nature of the markets when you have a really news-driven week, and that's what this week has been. It's not a week to get in and do a lot of trending trades. It's a week to get in, take advantage of the bearishness when it's there, and then take advantage of the bullishness when it's there. Let's see, Jeff said you got a one spider put for $285, even if it goes against me with the Fed, still within my risk tolerance, right? Because it's at the 10 moving average. So there you go. So a little speculative, he says, but he's doing it knowing what he's doing and knowing it's within his risk tolerance, and he's okay taking that chance. And that's fine. I'm fine with that if you're aware of the patterns and the risk and all of that. I think that's a great play when you look at where when you look at the fact that the S&P is trading right up around a resistance level. Now, Debbie's bringing up Apple, and let me catch up because I know I've got a lot of questions here. Trying to catch up to the questions here a little bit. You guys are going talking about Apple now, and look at the rally. I'm actually a little bit surprised by the rally here. This later, kind of mid-morning. Not that, it's unheard of, but I guess what I was reading, this is the first time that, okay, no, this cracked me up. One of the things I read is this is the first time that Apple is expected to, to come in worse than expected or something. It's the first time that people have lower expectations on Apple, basically, than they've had in the past. But the expectation number is supposed to be what people expect. So how could the expectations be lower than expectations? That I didn't get. It cracked me up. But that was the talk that I was reading the other day. So, but interesting enough here, you're seeing that things are rallying, and they do announce earnings tonight. And so this is something that you're going to be really practicing some patience, or you're day trading, because you wait until after earnings are released to trade some post-earnings trades, or you could take advantage of some of these little swings and do some day trading. And with earnings out tonight, you don't have a lot of time. But that said, this has been a phenomenal run this morning. And if you look at this, let me just back this up. Just looking at the 5-minute chart, this is where we had a change. When the 5-minute here on Apple pushed from below the 10 exponential moving average to rally above the 10 moving average, that was a bullish, kind of a bullish change. So we had bullish, a change around 98 and change, almost $99. And since that point, it's performed in that bullish kind of trending behavior where it had a retracement candle, but it was a small one. And then it pushes up above the candle body, and the 10 moving average has been wrapping higher, holding as support for Apple through this entire rally. Right? And every time it's traded down toward the 10, you would have had bullish trading opportunities. And just look at even the bullish engulfing candles here. On these candles, when they come down close to the 10, it's followed with a bullish engulfing. You got a doji there, bearish candle there. So it's happened several times this morning. So you can see where the buying pressure is here. And if people are buying right now, it means somebody thinks that something may be good with Apple. Now, how much can Apple affect the overall markets? They can affect the markets certainly, and it's still a decent-sized stock, and it's one that people watch a lot. I think more than just their market cap, I have a feeling that they could affect the markets more on just a psychological level, right, where traders realize, hey, Apple, it's a big deal. They've got a lot of products that a lot of people use, and if people aren't buying those products as much, could that be a sign of weakness in the economy? And that may be taken as a bearish, signal if they don't do well, and it could affect the markets in general. It also, the flip side of that, Apple has not been the biggest driver that it was in the past. So although I think it still has some effect, it probably doesn't have as much as it did 4 or 5 years ago when it was huge and it was a big, big deal. Before it kind of led the S&P, and you don't see that so much anymore. So you look at this week, we have, let's see, just off the top of my head, we have Apple and Amazon and this Netflix. I'll show you the ones that I've been watching a lot. Amazon is in a couple of days. Yeah, Boeing even, tomorrow morning pre-market. So if you guys want to just take a note of these, things like Apple and Boeing tomorrow morning could be post-earnings day trading candidates tomorrow. Disney's coming up next month, which is not that far away, a couple weeks. We have Facebook tomorrow night. Google next week on Monday. And let's see who else here. I think those are the bigger ones. Oh, SanDisk. SanDisk announces tomorrow night. So that might be a good one to look at. And maybe not even so much for a day trade today or tomorrow, and it could be, but maybe at this point more of a post-earnings trade. Now, I have to say, did you guys, this is another market insight one. If you were watching and listening, Scott, to the market insights, this SanDisk was one of my bearish candidates. And you know what? Actually, we talked about this last Thursday night in the trader stock. SanDisk came up on the scans, and they were there Thursday night when I was researching, and it was in this pattern right here. This is how it looked Thursday. It had a potential falling 3 candle pattern. So off of that, you've got, let me back this up. This was at Thursday. You know what? This probably was not something I talked about Thursday night then in the trader stock. I think it was over the weekend in the market insight, because it was Friday's retracement that caught my interest on SanDisk, because it had sold off nicely last week, and then we had a little bit of a retracement, small candle body, long wicks on either side. So you guys know what this is, probably especially since I just told you. But it's not yet a falling 3, but it is potentially a falling 3. Also called the Harami pattern, right? It may be that a stock in this pattern continues to break down, and it all comes down to what's the feel of the overall markets? Are the markets more bearish? Stocks like this and these patterns are much, much more likely to break down. So I put a couple of lines. This one, you don't see it, but the line that I drew, it's drawing weird to the right of the chart, but I drew a line here below that candle body. You'll see when I go to the next day. And I drew a line below Thursday's bearish candle body. So I'm basically saying, look, remember the entries I teach you in the trend trading DVDs? I'm basically saying these are two possibilities that if this stock is going to break down and continue to weaken, it creates bearish trading opportunities below the little bounce day right there, and also below the bearish candle. So then out of the blue, and I got to tell you, I was shocked by this, but on Monday, SanDisk was tanking, and not just a little sell-off. It had a phenomenal sell-off and a continuation of the downtrend. It's not something I ever would have caught or even known about had I not researched and gone through the momentum scan over the weekend and just saw that really, really great falling 3 pattern. So this had a phenomenal sell-off on Monday, and it did bounce at the lows, as you can see. But even with that long wick at the bottom, for a stock like SanDisk, that its average true range, if you look in the upper left-hand corner here, its average true range is 273. On Monday, it sold off $5.68. It was awesome. This is one of those windfall kind of profits I like to talk about. The pattern was there. The setup was there. There was nothing that was, shockingly different about this trade until once the trade was executed, there was just a phenomenal amount of selling pressure, a lot more than you may have even expected. But it worked beautifully. And then with the retracement today, here SanDisk is retracing with the rest of the markets and moving up toward the 200 simple moving average. Now, knowing that earnings are out tomorrow night, if you'd purchased put options yesterday, and let's say you held those overnight, what would you be doing with those? I mean, you really would have sold this morning. Really, that second candle in, you'd be out. And still, that's just around $62. And if you were buying put options yesterday at around, let's call it 66 even, way down here. Look at the daily chart. Let's call it way down here, way below Thursday's bearish candle body, around $66. That's still $4 of movement in your favor. And that's not even talking having the very best entry and exit. So there are a lot of opportunities out there as you trade things into earnings, but we're running out of time, and so you don't want to hold on too long. Now, if you have any interest in trading SanDisk, they're setting up in a beautiful squeeze play. Like this, I may have to text out a little bit later because it's got nice bands pinching together, a lot of slowness, not much going on. If we have a breakout of the Bollinger Band pinches, this will give us some really solid directional trading signals, but not for anything more than a day trade because earnings are tomorrow night. So take this, add this into the batch of stocks that may be released or that will be releasing earnings this week, and even this adds to the volatility of the markets. And in addition to that, gives us a post-earnings trade on the 28th. All right, so who else do we have here that is announcing? We've got and there of course are other companies. These are just the ones on my list. Tonight with Apple is VMware. So these are the few of my top picks as far as companies that have earnings this week, or like Google, who is on Monday. But these are my kind of getting my first focus, and then I'll continue to run through my scans and see if there are any other patterns that pop up that we want to pay attention to. But VMware on the 28th, WDC. So in 2 days, this stock, and this is cute. Come say hi. Or tell everybody what you want. Come say hi. Say hello. Hello. Tell them what you want. She wants chocolate chips. What do you want? I want chocolate chips. Chocolate chips. There you go. Okay. So anyway, so you can take a chocolate chip break, or you can hang out here and WDC, because of their great sell-off. Some of you guys have seen me talk about this here. WDC had a Bollinger Band pinch and ended up breaking down. It moved with a lot of momentum. I kept waiting for a big, healthy retracement, and we just didn't get it. So now, this is, after so much selling pressure, this is the kind of stock that often will end up having a quick rally into earnings, and it's just 1, 2, or 3 days before earnings, just because of of how much it has sold off up to this point. I'm realizing as I'm talking to you, my text chat isn't scrolling, so I'm missing some of your comments. So hang on. But hey, Elizabeth, good to see you online here. Okay, so Boeing pre-market. Scott's saying Biogen is pre-market tomorrow as well. All right, awesome. So you can add that into the list. Mike was asking on SanDisk. Let me jump back here for a second, because on SanDisk, there is the 200. So yesterday when SanDisk was high five, thank you. Yesterday when SanDisk was breaking down and completing the falling three, it also shortly thereafter broke below the 200 simple. All right, so there we go. So yeah, and basically the breakdown or the entry on SanDisk was anytime after the first 5-minute candle, because that's where it started completing the sign of the bearish falling three. All right. Yeah, and you know what, Elizabeth, talking about Green Mountain, you know what's going on with Green Mountain? They are being taken private. Isn't that right? It's like a buyout. I think somebody's taking them private. In fact, this still just kills me, because we had some call entries over here, and the day before that announcement, here, I got to show you this, because if you guys weren't around, if you didn't see this then, oh my gosh, this was so, we had a couple of different entries, buying calls, and I was talking about in classes just because it looked like the Green Mountain was starting to bottom out, and it was creating higher lows. And so we had some entries here, 152.60, and then we had this bullish engulfing close. So I said the next day if it goes higher, we're in. The next day it pulled back. I'm like, okay, even better. Retracement, all it has to do is bounce above the 50. That's all it has to do. I'll have a place to buy calls and just buy more time and do a trending trade. And then right there, overnight, they announced a buyout. And so if you had positioned it earlier, you were golden. If you were waiting for that very next morning, we missed the big gap above. It was so irritating. The timing was terrible on that announcement. But there we go. So now that's why it's doing nothing, and there won't be much to trade at this point. You want chocolate? All right, looks like I lost audio. Let me do a little tweaking and I'll get chocolate chips. See if I can fix this. Okay, how's this? Can you guys hear me now? It seems like it cut out and I had Sydney interrupting. All right, cool. Thank you for your patience. So yes, she calls them chocolate chips. So I don't know if she's chopping it, but there you go. Chocolate chips. I mean, there. See, I get the Parent of the Year award because it's 9:30 in Seattle. I'm giving my daughter chocolate chips already. I just give her a few, one of those little teeny measuring cups. And it keeps her happy for me to teach the class. Well, blame it on Bill. See, this is it. My kids, they're all about chocolate. I love it. Tom says, the power of food. Food usually shuts up. Man, I forgot it works on kids as well. It's true. It's pretty powerful. All right, there we go. Yeah, we'll get her all sugared up, but she's going swimming in a little bit, so yeah, that'll work. But anyway, back to the market. So yeah, so there are a lot of really good things, and you know what? I expect some nice trading to continue here this week. But I really would like to caution you. You know, it's wonderful trading. It really can be, but it's difficult in that it's quite choppy. And so, you know, I'm not always the biggest fan of just day trading, but these are the next couple of days, or a couple, you know, today and tomorrow especially, are a couple of days that it kind of makes sense, just because of all of the news, all of, you know, especially the earnings from the bigger companies out there, and then you add to that this stuff with the Fed. It makes it a tough market, and we're already seeing these wild whipsaws, and so it's something just to be aware of it. And this is where I said, even over the weekend, I said, look, if you're more of an end-of-day trader, this is in the Market Insight, I was suggesting, not that I tell you what to do, because remember, Cindy and I don't have licenses, we don't recommend or advise. However, I was saying, look, if you're an end-of-day trader, the early this week is probably not in the market for you right now, because it can be so choppy with all the news. And it isn't always, but sometimes it is exactly what we've gotten. Down one big day, up another day. I mean, it's tough unless you're right there watching it. So once we get beyond the Fed statement, typically Wednesday tends to be a little bit volatile still, and then by Thursday morning, you tend to see more consistency in the trends and in the patterns. So that's where I look for the longer swing or trending trades coming up, even the short-term swing trades that are several days long, kind of looking at those with the target of maybe starting those on Thursday. Everything until then is really short-term trading, just because I don't like to buy puts, you know, on such a strong sell-off day yesterday and hold them all through today's retracement, knowing that we're heading into a Fed statement. And the Fed scares me because they can completely change the tone of the markets. And as you know, as you're hearing, there are people out there that have a real bullish feeling going forward, and there's some that have a real bearish feeling. And I know, don't be shocked, but I just don't know. And so I'm waiting to see. Things like Santis, the retracement is great, but it's still below the 200 simple moving average. So if things, you know, break down from here, great. We've got nice bearish trading opportunity, but then we have to factor in, well, earnings are tomorrow night. So we literally just have one day. So day trading until after earnings. Let me see if I missed any questions here. Caught them. Oh yeah, Jose was talking about that Green Mountain. Sam reminds me when Buffett bought into BNI. Yeah, absolutely. Sydney says invest in chocolate. That's what she says. Hershey, Nestle, that'll work. All right. Come to New York, Jose. Yeah, I wish. You know, Jed is actually in New York. I'm cracking up. Jed made it into New York Sunday from Seattle, and Rob was still stuck in Chicago. He couldn't get home. So I shouldn't laugh. I don't know how he couldn't get there. Jed made it in, so he's been there all week, and he said it's. You guys who live there know this. He said it's like everything's a big puddle now as the snow melts every day. He's walking, across the streets and walking through big puddles of water, and we just don't deal with weather like that, like snow, and honestly, not much. Even though it's drizzly here, it's not a lot of water. So he doesn't have the right shoes for that weather, and his feet are soaking all day long. He said it sounds miserable. But he's actually teaching a class in Times Square. So I almost went, but I'm kind of glad I didn't. All right, I think I got the questions. If I missed anything, I'm just scrolling through the text chat here. If I did miss anything, just feel free to type it and paste it back in here, just copy and paste. Patty, are you serious? She says, Rob didn't sound too enthused, stuck there in Chicago Sunday at his market insights. I would say live it up, have fun, or fly straight to Atlanta. You can hang out there at the trade school. Yeah, if it weren't for kids, I would just totally, if I didn't have the little ones, I'd be all about that. A couple free days in Chicago, right? All right, that's funny. I'm going to have to listen to it now. All right, Julie, yes, hey, Julie just asked about the new DVDs. I actually saw a little preview. I wonder if I could show you. Do you guys want to see it? If you want to. Let me see if I can figure this out here. Give me 2 seconds. Because I've got to, I was sent a link. But I have to figure out how to show you. Let me see if I can find this link. Okay, so hold on. Let's do this. I hate the sound. I'm just going to tell you right now. Okay, if I can come over here, I think if I open YouTube here, I think I can make this work. Might be kind of fun for you guys to see it. So what's happening? They're in process. He's working on them. I don't know if the sound will work. Can you guys see this? Right? That's just, I just think it makes more sense. Does the sound work? Hi. It's not example, just work through it all. Hi. It's going to start, to use your 5 exponential average. And you can see here on the screen where that comes into play. Okay, the sound is shut. So I'm just going to turn the sound off, and let me show you what he's doing. You guys can tell if you like it. So you'll see that he'll switch back and forth. One of the things we told him, look, you guys, just a minute. We're out of chocolate chips. But one of the things we told him is, you guys don't need to see us. You need to see the charts. And so he's done a really good job so far in this little clip that I've seen. It's about a 4-minute window. And he's looking at the charts, the slides. And then he'll do this. Just a second, okay? He'll do this picture-in-picture window. You have terrible timing. You know that? I'm sorry. She's all over my lap. All right, so I'll play this a little bit, and you can kind of see how it goes. So you'll see, we're going to try to make that picture smaller, but he's got it set up so that you'll see the charts and the screen. You'll see the screen drawing. Anyway, what do you think of that? So that's kind of where this isn't final at all, but that's how it may look, something like that. His target is still to have these done by Valentine's Day, which will be great. Yeah, and so then he's got different camera angles. So he'll show this, and then he'll switch back over to just like the full slide and the full screen. someplace here. So you won't, on all of these, there won't always be that picture-in-picture. So I don't know, you guys can tell me if you like the picture-in-picture or not, because we can take that out. So. Oh yeah, Mike said like it. Wish we'd had it when I was a studio rat. It's kind of cool, right? Yeah, Dennis says great. It looks like it did when it was live at Phoenix. Exactly. Ah, wait, thank you. Love the pink blazer. Thank you. Thanks, DJ. All right. In fact, one day I had a, I was going to say wardrobe malfunction, kind of, not really. I had a black and white checkered jacket that did not work really well with the camera, so I had to go change. So we changed it. I just restarted the beginning of the second day. It was pretty funny. All right. Yeah, there you go, Deborah. That's not a bad thought. You know what? So Deborah said maybe instead of the lower right, push it to the lower left. That was the only thing about that they're showing that from the angle that I'm, where I look to my right and the charts are up behind. You see how that's what he was trying to do. But you're right. I'll make sure. In fact, in talking about it, he knows to make sure that we're not blocking out any of the, the charts and the important information. So that will be one thing. I'll just send him a little bit of feedback on and have him work on that and make sure. Because we could even take out the picture-in-picture entirely and just flip to the focus on the charts if you would like as well. So if you guys have any feedback or comments on that, let me know and I'll pass it along. Yeah, that was, and Jeff said make sure it's smaller. And that was exactly what I told him. That was my feedback. I thought I liked it. I could go either way. The picture-in-picture, I think it adds a nice little touch, but to make it maybe a little bit smaller might be nice. Okay, and that's true. Elizabeth said that both people learn better that way. There is something to that, leaving, that's kind of the end of the sample that he gave me. But there is something to having that, I guess, I always like it because it's sort of, if you don't hear things well, you can, to see me talking, you might pick up more, I don't know. But anyway, we'll see. Yeah, there you go. Smaller would be great. Okay, yeah, thanks for your feedback, guys. Yeah, and now, okay, Bruce, perfect. So maybe push it, because I wondered that, is there a little more room to move it lower in that right corner? Thank you for the feedback. I'll pass it along. But that gives you an idea of kind of what it's going to look like. And so that's kind of our starting, I guess that's our starting point. He's got, he's working through it right now, and he wanted to make sure that we liked the way that was set up before he went further. Cindy, can you say hi to everybody? All right, hang on 2 seconds. If you guys will wait, I will give her some more chocolate chips, and then I'll come back and finish, because she's this little worm. Hi. Okay, hang on hold on 2 seconds, because now she wants to run my computer. So if you guys, I'm sorry, but just I'll be right back. Okay, I am back. I'm so sorry. But thank you for your feedback on the DVDs. Brett says, when I get the DVDs, I'll get an uncomfortable hotel sharing table to set up while I'm watching them. And it'll be just like I'm right there. Nice. Thank you, Brett. All right, so yeah, they are, his goal again by February, he's going to have those set. Yeah, good point, Jeff. Send this way. It's a good, that's what I thought, kind of that good balance between too much chart, too much speaker. And so, and this is nice because the guy that filmed him, his name is Jay, he is putting it together, and he's using, I think a lot of you have met Dean. He's a good friend of Bill's. And Dean is a trader. He's, in fact, a phenomenal real estate guy, too. We had taught a couple real estate classes, and Dean was the one that taught those. He's doing really well in both real estate and stock market. And so he's a great one to have around because he's worked, just with Bill over the years, just kind of hanging out and getting to see the stuff and the material and the DVDs. So he's helping Jay. Jay's actually his nephew, I believe. And so he's helping him. So you're getting the perspective, not only just a guy that films and doesn't know how to trade, but the perspective of somebody who is a student, who's Dean, right, who is a trader, who is a student, who's working on becoming better, who wants, so he knows what students are looking for in the DVDs. So those two together, I think they're going to get it done and do a really, really good job. So I'm impressed so far. Anyway, so that's where we're at. Target date, Valentine's Day. So check those out. If you have a chance, I know every once in a while they're offering some pre-order specials. I'd take advantage of them because you know how that works. Price goes up once they're ready. Okay. Cat says way too much speaker. I would agree. Way too much. Way too much, especially those first 2 days. All right. There you go. Thanks, Jeff. Just says no worries on Sydney. Heck, it's a free class, right? Seriously. You get what you pay for. What were you thinking coming here to a free class? Oh, I'm just kidding. All right, let me do this. Just a little bit. Yes, you get a credit. I know. Usually I try to have the babysitter set up, but she wanted to take Sydney swimming, so she's picking her up in about an hour, which she's going to love. All right, so things to look for this afternoon. Let's, all those stocks that I went through that have earnings coming up, watch for those for some potential day trades. Things like, Apple and maybe even Boeing, although probably not most exciting, but Amazon and some of the other stocks that have earnings coming out, even maybe a WDC. These may move pretty well the next couple of days if charts and the momentum seems to be slowing down, which sometimes happens when you get to the Wednesday before the Fed. Sometimes, not always, but sometimes things will slow down and go quite sideways. If they do, your better play is to wait and either trade Wednesday afternoon after the Fed. The first half hour gets awfully tough to trade, but after that, you can see some stronger trends and more follow-through, or wait till Thursday, right? So take advantage of any short-term trading if we have it. If things slow down into the Fed, then just slow your trading down and wait. Thursday is where, again, I love the setups from Wednesday to Thursday because we tend to get just a better overall movement at that point. People have had time to incorporate earnings from some of these bigger companies. People have had time to delve into what the Fed put out in their release and really figure out how they want to set up their trades going forward. So you tend to get more consistency after Thursday. Okay. Yeah, thank you, Bruce. Okay, love it. Yeah, more feedback on the DVDs. It's awesome. Thank you. Thomas, am I coming to LA for the next step, February 10th and 11th? Probably not. But I just thought of that this morning. I don't even have a clue where our next steps are going, and so I will look at the schedule and talk to Jed and figure out what we have going on. And once I get his travel schedule, then I can figure out if there are any events I can make. So if you have requests, let me know, and then I'll see if I can work any of them in. So LA, Fort Wayne or Tampa, maybe. Atlanta, yeah, I haven't been to Atlanta for Next Step in a long time, so that might be a possibility. I did see a San Antonio. I think there's a good chance I may be going to San Antonio, but that's all I can really tell you right now. Let me work on it this week. I'll figure it out. I'll let you know. In fact, I should be able to let you know either in Traders Talks by Thursday or in this class next week. I should have things finalized. Okay. There, yeah. Oh yeah. See, San Antonio is not until March. Thank you, Dennis. March 10th. Oh, Philly, and you know what? That's another city I haven't been to in a long time. I would love to go to Philly as well. Let me see what I can swing, because unfortunately I can't do everything, and I've got, it's just at that point. Travel, I hate to say it, because it is in my blood. I love it. I love to travel, but I've got with the kids, and especially my oldest. Well, even my youngest. I don't know. It's getting harder when I'm gone. So I just try to balance it and make sure it's not too much. So. If I could just send them off to boarding school, then I'd be good. I know. All right, so, oh, and that's right, Jeff, Chicago. Jeff's reminding me of the 5-day. It is the week of February 22nd. And so for sure, and that's one thing, that's an entire week that I will be hanging out in Chicago. So come hang out. We're going to find some fun things to do to stay warm. So heat your city up for us, Jeff. But yeah, it's that entire week there. I'd love to see you guys at the 5-day, so think about that, look into that. If you haven't gone, it really is pretty amazing. And this time we're going to be, rather than in Atlanta, this will be the first time we're going to do this class at the CBOE for the 5-day event at the Chicago Board of Options Exchange. So it's going to give us the opportunity to do some things we haven't been able to do in the 2-day classes at the CBOE. And then also for the 5-day, I think it's going to be really cool to have our equipment right there at the exchange. We're working on getting some market makers to come up and talk to the group. And then again, just more importantly, it's just the focus on charting and trading and getting the strategies down and knowing how to handle the markets. Traditionally, this time of year, through spring or summer, is traditionally one of the most profitable times of the entire year. And so if there is a time to really put your focus on trading and get this down and really practice this stuff, it really is right now. So do whatever you can to get into these classes and learn as much as you can, because this is the time between now and really when things slow down in the summer. This is typically the best, most profitable time to trade. Honestly, my favorite quarters of the entire year. If I could trade the first half of the year and take off the last half, I'd do it every year. Oh yeah, Diane said CBOA was a great place for the next step. Yeah, it's a great facility. It's nice to be right there in the action, and I love it. Of course, me and food, I love it that there's a lot of choices of food to eat and just a big variety, and it's just a neat place. If you've been to Atlanta, as much as I loved our setup at the trading lab, it's a little bit different. We're kind of in the middle of nowhere. Yeah, there we go. And I'm going to have to buy some shoes, Scott just says. All right, I like that. All right, so you guys, yeah, that was basically what I had planned. I wanted to show you the different chart patterns and talk about the S&P. So if you'll take this as your setup, watch and pay close attention to the companies announcing earnings, and especially the reaction to earnings. Kind of curious or interesting here that Apple, as we've been talking, they've broken the uptrend that we had. So if you were day trading Apple, the exit would have been hit. You would have had entries over here above the 10, and then over here on the retracements near the 10, we talked about the bullish engulfing candles, and over here we got a great Bollinger Band top and a price double top. And that right there is a clue to be real careful and likely exit even before a break of the moving average. Worst case scenario, you would be out of the trade as Apple broke down below that 10 exponential moving average. So now this also looks like it's moving into a pinch. So trading plan here is to hold out, be careful, let things go sideways, and wait for the next breakout of the Bollinger Band pinch. All right. Philip, how about bringing your DVD filmer to the 5-day? That is an interesting idea. That would be, yeah, I mean, you know what? Maybe down the road there's a possibility of that. Not this February, for sure, because he's still going to be either just finishing up John and Bill's DVDs. Well, I'm hopeful by then he'll be done, but I don't know if he's going to be able to pop right back out. But I'll float that idea to him and get his thoughts on that. I think I have to say though, I think you would probably lose something in the DVDs, because a big part of that class is that you're there trading the markets, practice trading and dealing with everything live. I think that's part of the big value of the class, is the opportunity to ask questions and just hang out and really tackle the markets together as a group. And the homework, we send homework home every night, and the group getting together and meeting and spending time together. We take everybody out to dinner one night, and then other than that, it's really a lot of people spending time in the class and outside of the class. And so I think with the DVDs, you probably lose some of that. Yeah, that's what Scott's been there. He said need the interaction in the 5 days. There's a lot to that, and I think that will be lost in the DVDs. I'm not sure it'll come across great. Jeff is asking, on Apple, you'd exit on that third spinning top candle, right? Close. So let me show you. Let's back it up. So right here, things look great on Apple. Still on a trend, beautiful bounce off the 10 moving average. At that point, on this candle right here, you can see by the end of the 5 minutes that it has closed without continuing to push higher and touch the upper band. That's a little bit concerning. Doesn't guarantee the trend is going to break, but it looks a little bit odd that you had a beautiful retracement to the 10, and then on the next rally, it only went up one candle, and it failed. This starts to look like a Bollinger Band top. So there are two things that I do with exits on this. One is if the next candle goes lower, and if it is truly a day trade, that is an exit. So you really can get out on the very next candle. Two, the second entry is exit is a breakdown below the 10. So if you're doing the fast exit, there is an exit right here around $100.50, right around there on that next candle. By the third candle down, that one breaks the 10 moving average and it's no longer a rising 3. So that is another place to scale out. So you can either exit everything right here on that candle, right at the beginning, or you sell half the position there and the other half when it breaks below the 10. And it's just a way that you're getting out because you know that you don't have a lot of time to hold through any sideways action. We know that Apple so far this morning has moved really pretty well, both down and up. It hasn't slowed down enough to move into the pinch like we usually see. So you've got to expect that could start to happen here at any time, which it has. So when it fails to touch the upper band and after only one up candle starts to pull back, that is basically presenting an exit for us. All right. So there you go. Yeah, so guys, take this, use this as your, just kind of a way to get set up into these earnings and post-earnings trades. As Sydney sings to you and serenades you for the rest of the market. Everything now she sings. You want to sing Little Monkeys Jumping in the Bed?
Why is Mommy jumping on the bed?
Okay. That was a mommy jumping on the bed. Mommy fell off him, and she says a bunka bunka head. Mommy Daka said. There you go. That's your serenade for the end of the class. Thank you so much for joining me. Thank you for your patience with little Sydney here. But she's having fun. There you go. Yep, that's it. I can't do better than she can. All right, you guys have a great day. Happy trading, and good luck with these markets. And just be careful. It's volatile. So wait for the best patterns, and if you don't see it, don't trade. And short-term focus right now until we get beyond the Fed. I will see you guys tonight in Traders Talk. All right, thanks everyone. Good luck. I will see you later on this evening.